Crypto coins, and more specifically Bitcoin, has taken a bit of a beating the past couple of weeks, as China has once again taken aim at cryptocurrency, this time citing the impact crypto mining has on the environment. They have a point too. Crypto mining uses a lot of energy and impacts a country's carbon emissions. Stay with us, as today we're talking about Bitcoin's fall as China takes aim at extremely harmful mining. Let's jump straight in. What happened in China? So, as we know, Chinese authorities have been targeting the crypto industry on the whole this year, but the latest assault on the decentralized network saw the government labeling the mining of crypto extremely harmful for the fact that it could jeopardize the country's effort to reduce carbon emissions. The spokesperson for the National Development and Reform Commission, Meng, went on to say that Bitcoin mining consumes a lot of energy. It is hard to disagree with this sentiment too. Bitcoin mining uses about 91 terawatt hours of electricity every year. That's more annual electricity use than the entire country of Finland, around 5.5 million people. This figure is around 0.5% of global electricity use, an extremely large amount when you put it into perspective. The government official went on to inform miners that they would face increased electricity bills if they are found to be mining crypto, but it is yet to be seen how much. This isn't the first time that China has spat their dummy out over crypto. Earlier this year, they banned the trading of cryptocurrency, seemingly not understanding the concept it was built on: decentralized anonymity. It was recently revealed that more than 75% of Bitcoin mining takes place in the 1 billion person strong nation, so a crackdown might not actually be in the best interest of the nation. Isn't this all a little hypocritical? Stay with us to find out what we mean. As we have reported, and is largely correct, the emissions caused by crypto mining are undoubtedly terrible for the planet, and it is probably a good thing that the Chinese authorities are cracking down on the practice. However, if what they were doing wasn't so hypocritical, more people would probably get on board with the idea of a crackdown. China is the world's biggest polluter, with more than 10,065 million tons of CO2 released each year. So is their crackdown on crypto mining really gonna make that much of a dent? Well, possibly, and it's a start. But we know for a fact that the Chinese government have had their noses put out of the joint at the rise of crypto, for the reason that it's difficult for them to regulate and profit from it, essentially. China's recent argument that crypto mining is bad for the environment, while it's true, stinks of hypocrisy. We know they do not particularly care about the welfare of the planet. The sheer amount of industry up and down their eastern seaboard is astounding. If they were more transparent about their issues with crypto and put all their cards on the table, then it would be easier to stomach. But crypto is here to stay, and ultimately, the Chinese government's tactics just mean that someone else is going to benefit from it at this point. What do China see as the risks of crypto then? While the positives of a decentralized network far outweigh the negatives, countries like China, who are used to running every aspect of their citizens' lives, view it as a financial risk and, more importantly, from their point of view, a way that their people can avoid regulation on their capital gains. The government has also pointed out the volatility of the market, which is true, but the stock market sees similar volatility, and we haven't seen them crying about that, have we? In response to the rise of crypto, China has recently rolled out a digital version of the yuan, which they see as the future, but it'll just serve to give China's central bank, and ultimately the government, more control over the flow of money within the nation. Communism is alive and well, folks, as well as the previously mentioned climate targets, in which Beijing says it's aiming to be carbon neutral by 2060. Yeah, right. The world's biggest economy will see frequent power outages, which has meant that their practices of power rationing are still happening. Another thing that the Chinese government has been vocal about is the rise of illegal activities using cryptocurrencies, as it is super easy to stay anonymous while using the coins. This has the Chinese government squirming, as obviously a very small number of people will abuse it and use it for illegal activity. But that is true of any currency, technology, etc. So how was Bitcoin affected after China's announcement? Stay tuned to find out. Whilst it's true that there was a small dip in the coin's price when the announcement was made, ultimately Bitcoin is bigger than any one nation at this point. So big, in fact, that El Salvador has recently made it legal tender. Bitcoin recorded its all-time high of just over $69,000 earlier this month, and despite its fall after the Chinese government's newest regulations, it's having an absolutely epic year. It has seen an increase of 110% in 2021 alone, which if you get in on the ground floor, you will be quite happy about, we imagine. After China took their latest swipe at crypto, Bitcoin saw a mini dip of around 7%, down to around $60,000, which was its lowest value in a whole week. Wow, you win, guys. Not. Ether, the world's second largest digital coin, also took a hit of around 8%, but is now seeing a resurgence. Their penny should drop with the Chinese government sooner or later if they are fighting a losing battle. The sooner they realize this, the better it will be for them and their citizens. What do you make of China's stance? Let us know in the comments section. Some Doge news next. Stay with us. The real-time settlement system, currency exchange, and remittance network, Brad Garlinghouse, has today said that red-hot inflation is creating tailwinds for the crypto sector. He also went on Dogecoin saying, "I'm actually not convinced," somewhat controversially, I guess, that Dogecoin is good for the crypto market. He told a panel hosted on CNBC that the coin, which actually started as a joke, only gathered momentum after Elon Musk got behind it. Well, tell us something we don't know, Brad. Dogecoin is different from other cryptocurrencies in the way that it has no hard limit on its supply, which might worry some people. Garlinghouse went on to point out that the rising inflation had accelerated the public's interest in cryptocurrency, saying that we are basically seeing an inflation unseen for decades. His comment might be taken with a pinch of salt, as Ripple itself issues the XRP digital asset, so maybe there's there's a bit of gamesmanship going on here aimed at the other players in the digital currency game. What do you think? Give us your thoughts on Dogecoin too. Can you see this one hitting the heights it saw earlier this year once again? More scaremongering next. Stay with us. Today, the International Monetary Fund, IMF, has said that it believes crypto poses a threat to the stability of the financial system, which is seemingly just more regurgitated nonsense. Where were the IMF's warnings before the financial crash of 2008, which saw millions of people around the world lose their life savings? This is obviously just another attempt to discredit the decentralized system and try and scare people into not using it. As we have previously mentioned, crypto is at the point now where these tactics won't have any lasting effect on it. The IMF spokesperson who made the claims, Gary Rice, said that he believes that the financial system's operating stability, integrity, which is hilarious, and investor protection are all at risk. We might be inclined to believe him if it wasn't for the years and years of financial mismanagement by the money men of Wall Street and banks around the globe. Your words carry absolute zero weight to people who actually see the long-term benefits of crypto, Gary. He was responding to a question about media reports that India was set to ban crypto transactions, but regulate them for people who hold them. Rice added, "Thus far, the IMF hasn't found financial stability risks to be systemic at the global level, but risks are building up and should be closely monitored," Rice said during the press briefing. Did anybody else notice the contradiction in the statement of the guy who works for the International Monetary Fund? Come on now, Gary. And finally, a bit of altcoin news. Stay where you are. Popular altcoin Avalanche, AVAX, knocked Dogecoin out of the top 10 altcoins this week. The surge comes after a deal the company made relating to the improvement of U.S. disaster relief funding. On Sunday, it hit $144.96, but has since slid back down to number 11 in the top altcoins list. The coin has a market value ranking of around $29 billion after its creator last week announced a partnership with global monolith Deloitte to build faster disaster relief platforms. Good work, guys. As always, thanks for tuning in. Remember to stop by next time. Why not try sharing this video with any crypto head friends of yours?